to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, folks. Happy Friday, TGIF. Welcome to another edition of Breakout Investing on TFNN, 877-927-6648. That's the number to use if you want to give me a call, talk about this market that continues to find an underlying bid here. Major averages looking to end the week on a positive note. They've been holding gains nicely all day. Taking a look at the NASDAQ composite in Tiger TV. Don't forget, Tiger TV is available on the homepage of TFNN.com. It is the show is carried live on Channel 1. It is archived on Channel 13. So if you want to look at charts live right along with me, you can do that. And if you want to look at Tiger TV on your handheld device, smartphone, you can do that as well. Just open that smartphone browser, type in TFNN.com. Over on the top right-hand part of the homepage, you'll see a box with some mobile devices in there, and click that box and Tiger TV will start streaming right on your phone. So taking a look at the NASDAQ composite, up 18.5 points right now, 0.6% to 32.41, holding near highs. It's easy to say, looking at the daily chart here, really not showing much in the way of sell signals, but you do have, distribution in the NASDAQ, and you have distribution really over the past 6 trading sessions. You've seen 3 higher volume declines in the past 6 trading sessions. So it's definitely something to keep an eye on. The last time we saw that back in February, the market started to rally in light volume, and it didn't mean much last time around, but usually, when you start to see higher volume declines, increase in frequency in the major averages, that can often presage lower prices ahead. So be careful out there. Some mild distribution in the NASDAQ composite up to this point. 4 higher volume declines in recent weeks, but it is continuing to hold near its high. The S&P 500, let's take a look at the benchmark index. We'll see it is trading in the top half of its range, near its high for the day, actually up a little more than 8 points, nearly 9 points to 1554. S&P 500 also holding near highs, and finally the Dow Jones Industrial Average up 74 points to 14,495. Just trading tightly, moving sideways. Dow's price performance particularly impressive. You can see the big move it made here. Little breakout over the 14,000 level, and then what has it done over the past 6 trading sessions? Just holding those gains, moving sideways. So technically the market still looks fine here. Definitely paying attention to mild signs of distribution in the market, but this as we've been saying, this uptrend is, or the market uptrend is, will continue to work until proven otherwise. And just a lot of stocks out there, even though many are extended, they continue to act pretty well. Don't forget, another way to listen to all TFNN programming is on your smartphone. You can open your smartphone browser, type in TFNN.mobi, and listen to the stream that way as well. Just plug those earbuds in, out for a walk, out for a run. Good way to listen to the program. Taking a look at volume on Thursday, NASDAQ volume totaled 1.63 billion shares. Right now we are tracking a little bit lighter than that, not by much though. In fact, volume on the NASDAQ tracking pretty close to that 1.63 billion that we saw yesterday. Volume on the New York Stock Exchange tracking about 10% lighter than the 648 million shares that we saw yesterday. Nice day for IPOs. Actually, one IPO doing well today, another one kind of a lackluster debut, but it's actually been a pretty good week for IPOs out there. Let's take a look at MRIN. This is Marin Software. They provide a cloud-based digital ad management platform. The company offered 7.5 million shares at $14. That was above the proposed range of 11 to 13. Shares of Marin Software last trading at $16.83, so up $2.83, up 20% gain on the day. So Marin Software doing well. Wasn't such a great debut for West Corporation. That's WSTC. It's a company I believe used to be public. It was taken private, and now it's being taken public again. It's a leading conferencing call center provider. They offered just over 21 million shares at a price of 20. That was below the proposed range of 22 to 25, and the stock is trading at 19.16, so below its offering price. So not a great debut for shares of West Corporation. Remember earlier in the week, MODN, Model N. This is a company that provides revenue management solutions to the life science and technology industries. It priced earlier this week at $15.50, and it's trading third day of trading at $18.60, down a little more than 3% today, but still nicely above its offer price. And a little speculative drug maker here, Enanta Pharmaceuticals, ticker ENTA, priced earlier this week at 14, now trading at 16.82. So it's a company that develops small molecule drugs to treat hepatitis C. So pretty good week for IPOs. A lot of kind of thin, smaller names debuting this week, but not a bad environment to be going public when indices are in confirmed uptrends. How about shares of BlackBerry? Boy, it looked like BlackBerry was going to have a nice day today. Hits a high of 16.82. It's trading all the way at its session low here. Heavy volume reversal. Last trading at $14.99, down 7.2% on the day. Guess you could call this a classic case of sell the news. BlackBerry, its new phone without a keyboard, the Z10, launched in the U.S. today. Trying to get a handle on how long lines are. It looks like kind of lukewarm so far, but it'll be a few weeks anyway before we get a handle on how that phone debuted in the U.S. It first started selling in Canada, in the UK, and debuted today in the United States. So bearish day of price action for BlackBerry, but you can see it's still holding above its 50-day moving average. Shares of BlackBerry down 7.2% to $14.99 after hitting an intraday high of $16.82. Checking in on gold. Well, let's start with the dollar. Dollar getting hit pretty hard today. U.S. dollar index at 82.37. 82.37, down 0.4%. Let's check in on the chart here. For the U.S. dollar index, it had been it's made quite a move since mid to late February. Still holding near highs, but looks poised to extend its losing streak to 3 sessions today. So dollar index last trading at 82.37. Bond yields still under pressure, down 5 out of the past 6 trading sessions. 10-year note at 1.91%. 1.91%. 30-year bond 3.13%. April crude oil settles at $93.71 a barrel, up $1.26, 1.4% gain for the week. Down just a hair, down 0.1%. These oil refiners out here continue to show no quit. Here's a look at Marathon Petroleum. Yes, very extended after a recent breakout over 63.64. It is trading right now at 91.24, up 2.5% on the day. So Marathon Petroleum outperforming nicely today, and it's been a nice orderly pullback so far in a company called Calumet Specialty Products Partners. This is a company that makes specialty hydrocarbon and fuel products in North America. Still holding up very nicely here, well above its 50-day moving average. You can see a nice breakout over 33 back in early February. It's now trading at 39.02, but consolidating gains and very healthy fashion and trending nicely above its 50-day moving average. Another oil refiner, recent new issue that we mentioned on yesterday's show, ticker symbol PBF, which is PBF Energy, came public in December at $26 a share. Another nice consolidation going on here, just off its recent high of 42. Stock is right now trading at 40.61, up 1% on the day. So you've got a nice little base forming here, PBF Energy, and let's not forget CVRR. This is an IPO that was spun off from CVR Energy called CVR Refining. So the ticker here is CVRR. It is underperforming today, down 2.4% to 34.53. It came public in January at 25 and continues to be a pretty strong performer, even though it is underperforming the market today. Checking in on shares of Biogen IDEC. So here's the deal. Their oral multiple sclerosis drug BG12, we're supposed to hear from the FDA next Thursday about whether or not it's going to be approved in the U.S. Earlier today, a committee that advises the European Union's medical regulator voted to approve BG12. And so that is, that's, you have to think a lot of good news has been priced into the stock here. Remember, back in January, this was $140-$145 stock. It's now up at $178.67. So I suspect that it has moved in anticipation of approval of BG12. We'll see, maybe not, but either way, it is extended here. I've been saying that a lot. Stocks just running higher. They're not basing. They're not taking a breather. They're just going up and up, getting more and more stretched. So that's probably going to pave the way for a pullback at some point. But so I wouldn't chase Biogen up here. But next Thursday, that's when we're going to hear about BG12, a stock that has, or a drug, I should say, that has phase 1, phase 2, phase 3 trials, all very positive for BG12. There could be something on the label. Because there was an animal study that used the drug that linked the drug to kidney cancer. A lot of people thinking it's not going to be a deal breaker. Approval of BG12 is widely expected next Thursday. Hasn't been priced into the stock yet. That is a legitimate question. In earnings news, let's take a look at some earnings reports. Late Thursday, Nike. Market like what it heard from Nike, ticker NKE. Very, very bullish move here. And actually a stock that technically, had just been moving sideways. 55 was kind of resistance here, but a big gap up for Nike. Just a very impressive move, up 11.5% today to 59.74. We'll kind of get into the details of their earnings report. Nike's performance is lifting some other stocks in the space as well. So we'll talk about Nike when we come back. A whole bunch of other stocks as well, as usual. Stick with me, folks. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Always amazing to me how a stock with a float of 594 million shares can move 11% in one day, but that's exactly what Nike is doing on better than expected earnings after the close Thursday. This is a classic base breakout, and what I want to do is just show you a weekly chart for Nike here. This is about as picture perfect as a base breakout can be here. So here's Nike. I thought I had a weekly chart here. Hold on one second. Maybe not. Well, you know what? I want to show you the weekly chart, so just give me a second here, and I'm going to pull up a weekly because it's worth looking at. A lot of people are wondering if it is too late to buy Nike, and you know the short answer, I don't think it is. I mean, yeah, it's made a big move today, but volume is so heavy. This is a stock that trades 3.5 million shares a day on average, and volume right now I think was right around 17 million on the day. So there's tremendous accumulation going on in this stock, and its weekly chart is definitely very, very bullish here. So you're in a market uptrend, a big breakout from a long base that started, all the way back in April, May of last year. This is a very, very solid move here by Nike. Earnings up 20% to 73 cents a share. That was 6 cents better than the consensus estimate. Sales pretty much in line, up 9% to $6.19 billion. Investors were cheered by the fact that gross margin improved for the first time in 10 quarters. China definitely still an issue for the company. Sales year over year down 9% in China, but North America sales up 18%. Very, very impressive. So Nike looking very solid here. Not surprised to see Under Armour benefiting on Nike's news, but technically a much different look than Nike. Under Armour still challenged here. Met recently with resistance at its 200-day moving average back here in late January, early February, and that 200-day line has been resistance ever since. So Under Armour up 4.3% today to 50.45, but it's a stock that has been under a lot of selling pressure in recent months. It is going to have a lot of overhead supply to work through as it tries to work its way higher. But right now it looks like that 52 price level could be resistance. Under Armour last trading at 50.45. All right, Silver Wheaton, SLW. We also heard from that company late Thursday. Silver producer is up 1% to $31.29. Earnings up 22% from a year ago to 50 cents a share. Penny better than estimates. Sales up 50% to $287.2 million. That was nicely above expectations. Company produced 8.5 million ounces of silver in the quarter, up 22% from a year ago, and 10% sequentially. Silver Wheaton has been under a lot of selling pressure as well. It is making a case it's trying to put in a bottom here, and again, decent volume today. Stock up 1% to $31.29. And news wasn't so good at Tibco. Remember, yesterday we heard from Oracle. Oracle, just a very, very bad earnings report from Oracle yesterday. A lot of people kind of raised their eyebrow. Company seemed to be just unabashedly blaming their sales force, blaming the salespeople for the shortfall. So Tibco down almost 11% today to $20.65. This is a company that provides middleware, infrastructure software, another cloud play here. Earnings down 10% to 18 cents a share. That was in line. Sales up 5% to $237.8 million, a little bit below expectations. So Tibco hits a low of 1915, a high of 2071, and it is trading near its high, actually, at 2065, but still down 10.9% on the day. Before the open today, we did hear from Darden Restaurants, DRI. Darden kind of telegraphed the results in February. They lowered their earnings guidance. This is another very challenged company out here, most known for their Olive Garden and Red Lobster chains. They also own the Longhorn Steakhouse. It's all operated by Darden. It's been working its way higher since February, trying to reclaim the 200-day moving average here. Nice move today in volume, up 1.2% to 49.53. I think this is sort of a relief rally here. People think the results could have been worse than they were, but they basically came in right what the company guided back in February. Earnings down 18% to $1.02. That was a penny better than expected. Sales up 5% to $2.26 billion. In line, same-store sales down 4.6% from a year ago. So that's a look at Darden Restaurants. All right, folks, headed into the second break. Got about 30 minutes left in the program. We'll be back in about 4 minutes. Stick with me. Breakout Investing on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Boy, Dow just acting so strong here. You can see a daily chart of the Dow. Recent breakout over 14,000. It just has not looked back, and just love over the past 6 trading sessions, just trading tight as a button here, still holding right at its 10-day moving average. The 50-day moving average for the Dow is all the way down at 14,023. So it has a ways to go to get down to that 14,000 level. Even if it does pull back, that's a pretty mild pullback down to that 50-day line if the Dow ever decides to pay a visit to its last breakout area, which again is at 14,000. But just trading very, very tight here, looking very strong. Let's take a look at the NASDAQ Composite. NASDAQ Composite also trading tightly, holding its 20-day moving average. The 50-day line for the composite is down at 31.79. So NASDAQ Composite still holding near highs. And finally, the S&P 500. Not showing much in the way of sell signals either, holding above its 20-day moving average, its 50-day line down at 15.16. So Headed into today, 3 higher volume declines for the S&P 500. We've seen 4 in the NASDAQ. It is worth paying attention to. It bears repeating. When you're in the middle of an uptrend, looking for sell signals, looking for signs the market may be ready to come in a little bit, always want to pay attention to increasing higher volume declines in the market. So with 4 for the NASDAQ, it is at a point where, it's not worrisome, but definitely I don't think this is the time to be aggressively allocating new capital to the market. Hopefully you've been putting money to work since November, December, January, and if you have, you likely have some nice winners that you can afford to let continue to work. But finding new buying opportunities, that is the challenge right now. So there are isolated opportunities here and there, but I am seeing my growth screens are just filled with extended stocks. All right, elsewhere in earnings, let's take a look at shares of Tiffany. Tiffany initially was having a pretty good session. It hit a high of 70.78, but shares are now trading at 69.22, near its low for the day, still up 1.9%. Again, the results here, there was fears that it could have been not a great quarter, but it was not bad. Earnings up less than 1% from a year ago to $1.40, 4 cents above the consensus estimate. Sales up 4% to $1.24 billion. That was in line with expectations. Asia Pacific sales up 13% to $254 million. Sales in the Americas up 2% to $620 million. In Europe, sales up 3% to $146 million. So all in all, not too bad at Tiffany. Let's take a look at MHP. No earnings here, but news from McGraw-Hill Companies is that they're going to sell their education unit to some investment funds affiliated with Apollo Global Management. Price tag $2.4 billion. McGraw-Hill Companies plans to rename itself after the transaction to McGraw-Hill Financial. All right, stocks within buying range, stocks that are worthwhile looking at here. FleetCor Technologies. Why is FleetCor worth looking at here? Well, having a great day, 4.5% gain to 75.62. But let's take a look at its weekly chart here, and what you have with FleetCor is a breakout from a 3 weeks tight pattern. This pattern forms, you can see the last base breakout for FleetCor. It's hard to believe, but this was all the way back in the summer of 2012. Broke out over 40. It's almost doubled from that point. No base form, but it did just rode its 10-week moving average higher here. And then what you have is 3 weeks where the stock basically closed within 1% of the prior week's close. That's called a 3 weeks tight pattern, and it can yield additional price strength, and that is what is happening with FleetCor. For the week, the stock is right now up 8.8%. 75.63 is the last price here. So FleetCor having a heck of a week and a breakout from a 3 weeks tight pattern today. This company provides fuel cards, payment products and services to businesses, commercial fleets, oil companies, things like that. Let's take a look at Celgene, CELG. Looking for an opportunity to get into this one. It's possible that Celgene by the end of this week could have a 3 weeks tight pattern in place as well here. You just look over the past couple of weeks. You want these closes to be within 1% of the prior week's close. So it's close, but Celgene, just another stock acting so strong out there, just not willing to give up any of its gains. Remember, I think it was a healthcare conference. I think it was the JP Morgan healthcare conference in San Francisco. Big move during this week right here when it broke out over $80-85 a share, but they raised their revenue guidance. They gave very long revenue guidance out till 2017, 2018, something like that, but basically saying that their fundamental picture is exceptional, and the stock really hasn't looked back and continues to hold gains nicely. So Celgene looking good. And then another company here, Verisk, VRSK, Verisk Analytics. Thin stock, but this is another one trying to break out from what looks like a 3 weeks tight pattern as well. So just because you miss an initial breakout doesn't mean you can't continue to monitor some of these really strong performing stocks. You can see where Verisk broke out 3 to 4 weeks ago, cleared a swing point just over 55. It's now at 61, but again, trying to break out from what looks like a 3 weeks tight pattern here. So Verisk looking pretty good here as well. All right, remember Lululemon? We heard from Lululemon yesterday. They reported earnings, and man, it rallied on the earnings, but the stock is really getting taken apart today, down 4.1% to 62.05. Small boutique downgraded Lulu to sell. I think it was to sell from underperform by a small outfit called CLSA. They lowered their price target to 55 from 79. That 55 price target actually doesn't look too far off there. I'd have to agree here. If you look at a weekly chart for Lululemon, its low back here in the summer of 2012 is right around 52. So they may be looking at this prior low, this support back in the summer of 2012. So with its break below this trend line here, it seems to me that a trip down to that 52 level could easily be in the cards. Of course, yesterday, along with their earnings report, they announced that they have some very popular yoga pants that were very thin, transparent, if you will, and they had to recall them. It's going to affect current quarter revenue by more than $10 million, I think. So, Lulu, basically the story here is multiple compression. Lulu's going to continue to report earnings quarter after quarter, and you know what? I wouldn't be surprised to see good, consistent top line and bottom line growth. This is a company that continues to sell a lot of product. Now, this recall might is probably going to affect earnings in the current quarter, but you just have a high valuation stock here. So if the market's used to a company growing at 30%, 40%, and all of a sudden that growth starts to slow to 20%, 25%, it's likely going to spark selling in the stock. So after a big price move over the past few years, it would appear to me that the big money has probably been made in this stock, and the risk for more downside is clearly there. Let's take a look at shares of Stratasys, 3D printers. Stratasys, has made a nice move off a recent low around 62.5. It's now trading at 74.68. What's noteworthy here is that it's trying to get back above its 50-day moving average. So all you have here is a stock that's forming the right side of a base, still not buyable. I don't think it's likely that Stratasys is going to retest its prior high here at 90. There was just a lot of institutional selling in this stock. So another situation where overhead supply, overhead resistance is probably going to be a real issue for this company, but we'll see. We'll see if it can get back above that 50-day moving average. If it can, it could make a run to that 82.50 level. So Stratasys in rally mode, outperforming nicely today. Decent volume too, up 3.3% to 74.68. Its 50-day moving average at 75.15. So you can see that there's kind of a line in the sand right there for Stratasys. Here's a name I haven't heard of. I popped up in a screen. Some of these real small micro-cap restaurants doing phenomenally well. Here's Fiesta Restaurant Group. This is a company, small market cap of right around 600 million, thinly traded, average volume just over 100,000 shares, but the company priced an offering of 2.9 million shares at $24.25. It is up 5.8% today to 26. So obviously demand very strong. If you want to know what an extended stock looks like, well, Fiesta Restaurant Group would definitely be in that category. It has made an incredible move since late last year when it was trading around $14-15 a share. It's now a $26 stock, and they operate Pollo Tropical and Taco Cabana restaurants, not only in the U.S. but also down in I think it was South America. But they do operate restaurants outside of the U.S. as well. So pretty nice price gain for that stock. All right, SMTC. This is another name we're kind of keeping an eye on here. Chip designer here. See the gap up back here earlier in the month, and just love how Semtech is holding on to its gains here. You got to pay attention to price action like this. I think we have a weekly chart for Semtech. Let's pull that up real quick. Good one for the watch list here. And see a big move a couple of weeks ago, held gains and trading tightly. Now this is not 3 weeks tight pattern. You can see it's holding gains nicely, but these weekly closes are a little further than 1% from the prior week's close. But still, you could get a little flat base that forms here, maybe a pullback down to that 31 level. If it finds support, that might be a time to start a small position. But Semtech acting very, very well in this market. Home builders, you've been talking about the home builders a lot in recent weeks, and Ryland Group still working on the right side of a base here. After a big move from 34, it's now trading at 41.87. Wouldn't be surprised to see a little downward move here, maybe one last shakeout before Ryland Group possibly tries to take out this recent intraday high of 43. So it's been a swift move up off that low from 34. So maybe you get a 5 to 10% pullback here, and that could pave the way for another breakout. I think fundamentals still look good in the home building space. Quarterly results have been outstanding throughout most of the group, and growth prospects look pretty good in coming quarters as well. So would like to see a low volume shakeout from Ryland Group, and also take a look at Pulte, PHM. A lot of home builders still out there looking pretty good. You can see Pulte Group is possibly starting. This is not a low volume pullback so far. It fell in heavy volume yesterday, lighter volume today. Looks like support at that $20 level. We'll see if Pulte Group can firm up there. But overall, home builders, continuing to show relative price strength out here. Hospital operator HCA Holdings, working on the right side of a base, going for a little breakout today, and stock is up 1.9% to 39.29. This is an example of what a base looks like. I think I have a weekly chart for HCA in here. There it is. Yeah, and you can see the start of the base earlier this year. The base forms. The stock comes down to its 10-week moving average, working on 4 straight weekly price gains, and could try to take out that the high in the left side of the base here. But HCA, another stock showing excellent technical strength in the market. Some names that I'd love to be able to get after a pullback to the 10-week moving average, and that is, maybe your watch list should be populated with stocks. They might be extended now, but when the market does pull back, some of these names are going to find support at the 10-week moving average. Air Lease. This is a company, as its name would suggest, they lease. They buy their own airplanes and then they lease them to airlines around the world, and it's been a monster performer. The stock is right now trading at $28.91 with support right in that 26.50 level. That's where the 10-week moving average here. So if we get a pullback down to this support level and it finds support, that would be an opportunity to start a small position. But only if it finds support, and it's clear that big investors are in there buying the stock on that pullback to support. So Air Lease, keeping an eye on that one for a pullback to the 10-week moving average. And we've been talking about Spirit Airlines, SAVE. This is another one, very extended in price, but this one, if it could pull back down to that last buy point right around the 21.50 level, I think that would be a good opportunity as well. But certainly not going to chase it up here. Other things SAVE could do, again, 3 weeks tight, move sideways, correct 5-10%, you get a flat base form, who knows? We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, friends, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. Let's check in on the markets here one last time as we head into the close here. Dow Jones up 68 points, 0.5% gain to 14,489. NASDAQ Composite up 17 points, 0.5% gain to 3240. S&P 500 up 8 points, 0.5% to 1554. So another solid day for the market here. A market that, technically looks fine. Really not seeing massive signs of institutional selling. Seeing what I would call mild institutional selling in the major averages, but will it be a headline next week that brings even more institutional selling in the market? It remains to be seen, but you have to give the market credit. There are a lot of stocks out there that are holding up just fine, and I did want to check in on Apple because it showing some key price action today. That 50-day moving average has been a resistance level for several months for the stock, but it is actually back above the 50-day moving average today. Not a whole lot of volume today, so this is a low volume move, but it is up 2% today to 461.60. 461.60. That's the last price for Apple, and this is a stock that normally trades about 19.5 million shares a day. It's only done 11.9 million shares today, so it's not like its move has been in huge volume, especially over the past couple of days. Volume on Thursday did come in higher than Wednesday. Looks like volume today is going to come in pretty close to what it traded yesterday. But the fact that it is trading above the 50-day moving average, I think, is significant. So Apple at 461.60, its 50-day moving average at 458. So good day for Apple. Let's check in on Mindray Medical. We've been talking about this one in recent days, kind of wedging higher here in light volume. Nice technical setup, but is it a stock? Is it a stock under meaningful accumulation here? It's most of its gains lately have been in average, below average volume, but you did have the swing point was 38.79, so it's trading at 39 right now. So it looks to be wedging higher a little bit, but still, decent company here. Good fundamentals, good growth prospects. Another stock just holding in there, just fine. Aruba Networks, another name we've talked about off and on the show. Definitely worth watching here. Holding gains nicely after this big gap up in February on strong earnings. I think I have a weekly chart for Aruba Networks. Sometimes I do, sometimes I don't. But yeah, here's another one. Support looks pretty strong in the 24 area. It's at 25.19 right now, but I would expect that 10-week moving average, if this market doesn't fall apart, I would expect that 10-week line to be a good support level for Aruba Networks. And check in on shares of Netflix as well. Check in on the weekly chart here. Shares of Netflix for the week down 2%, but still showing pretty good technical action here, holding on to a lot of its gains. Last trading at 180.90. So this one's a little flat base forming here. This one's on breakout watch. If we do get another round of money that comes in from the sidelines, this is a stock that could continue to work very, very well. So that will do it for today's show. Hope you all had a great week. Hope you have a great weekend as well. Coming up next, the Tom O'Brien Show. Next week for Breakout Investing. We've got 4 more shows left: Monday, Tuesday, Wednesday, Thursday. So I'll look forward to it. Hope you all have a great weekend. Be safe. See you on Monday.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.